Welcome to Common Sense Investing. My name is Cameron, and you're here for another Monday evening live stream talking about microcap stocks. My video is working, my audio is working, I can hear myself in my earbuds, so it's a good day, or at least a good start to this live stream. And I want this to be a good live stream. In fact, the presentation that I have today, it made me happy. It's actually a heartwarming presentation for me because I'm going to talk about the changing landscape in microcap stocks, but I see it as changing for the better. I'm going to talk about institutional ownership and what that looks like moving forward, the discovery process, and how there's so many more good new microcap investors out there, and how that's changing the investment process in microcap stocks and potentially giving us a little bit more control. So, as always, I see there's a few comments in here already. That's fantastic. I'm going to deliver a presentation to you. I've got about 20 or 30 slides talking about the changing landscape in microcap stocks. Feel free to ask questions or comment as I go along. And then at the end of my presentation, I'll take Q&A and talk about anything you want to talk about. One of the things I'm not talking about today, at least in my presentation, is I'm not talking about specific stocks because, my gosh, the next week or two is going to be very, very busy with earnings. And I think I'm going to get, very down to specific stocks for the next couple weeks, looking at different financials and making some predictions on what are my favorite and what are not my favorite stocks to invest in the future. So future live streams and videos will be a little bit more specific, but today I get to be a little bit more vague, and I love it. And really, I'm talking about institutional ownership here. I'm talking about CanSlim, and of course, I'm a big proponent of CanSlim, How to Make Money in Stocks, the book right here. William J. O'Neill talks about CanSlim, and it's not truly for microcap stocks. In fact, in the book, a couple times, Mr. O'Neill says don't invest in them, right? So we have modified the CanSlim method, especially, Paul Andreola patented the modified CanSlim method to work a little bit better for microcap stocks. And even though I don't follow it 100% of the time, it works in a lot of cases. And one of the things that, for microcap investors, there's things that we can control, and then there's things that we can't control. And you can argue that some of this is out of our control because like microcap stocks are unpredictable somewhat from quarter to quarter. But at the end of the day, these are things we can look at, and you could determine whether you want a high-risk microcap stock that's profitable, not profitable, at an inflection point, what products they have. You could do some research on supply and demand, whether they're leaders or laggards in their industry. These are things that are somewhat under the control of microcap investors. The changing landscape lately has been institutional ownership. We can't control what institutions are buying or not buying, whether capital is coming down market or not. And of course, market direction. Nobody has been able to control Donald Trump whatsoever. Even Donald Trump can't seem to control the markets these days. He's good at crashing them, but he's not good at bringing them back up. So today, though, I want to focus a little bit more on institutional ownership. And this presentation started off with this discussion, but it led me more into how many good new microcap investors there are out there. And I want to talk a little bit about that. Why did this come up? Why am I talking about this today? Why is this so important? What kind of investing education am I going to give here? It got brought up for a few reasons. One of them is a fantastic article from Sebastian on Twitter, Sebkrog on Twitter. I will link to this article and this post down below in my pinned comment. Give me about 10 minutes until after this live stream, and I'll link to it in the pinned comment down below. And it's a case study. It's about talking about the edge that retail investors have. Our edge is to be able to buy a company early before institutions can own it. The concept of the discovery cycle is well known, but how exactly does this play out in reality? And in this article, Sebastian gives a case study using a stock that I had on my top 10 stock picks for Planet Microcap in Vegas, which was Coil Energy. But more importantly, the article really explores this, which is, being early into these microcap stocks and how that becomes profitable, like the discovery cycle. So I'm talking about institutional ownership. Maybe CanSlim, and maybe by saying institutional ownership, maybe the right thing to say is the discovery cycle. And the discovery cycle was coined by Paul Andreola. There's videos on him talking about this that Sebastian gives right in his article, and talking about how through the discovery cycle, it can be the twin engines of outsized returns in microcap stocks, where you get not only EPS growth, where you get improving financial fundamentals of a company, but as that stock gets discovered, you get multiple expansion. So this is everybody's dream, getting those twin engines, getting the EPS growth, which we can somewhat control through research, and then getting that multiple expansion, which to date, we have really not been able to. You can't research it, right? You have to get other investors interested in a company enough to get multiple expansion. So that's something that we could talk about. Why are we talking about it? Because it's incredibly important. Sebastian gives a few examples, or one example in Coil Energy. I'll give you a few. In the case of my channel, is Kraken Robotics. So this was Kraken Robotics. I was covering them for a long time. They did very little. They did make some people some money because they went from like 25 cents to around 50 cents in the highs over here. But really it was, stagnant there for a long time until the discovery process and institutional ownership. So if people remember May 21st, 2024, right here, Kraken Robotics, a financing from Beacon, Cormark, Canaccord, basically Beacon and Friends, smaller institutions, $20 million bought deal financing at 95 cents for Kraken Robotics. And it was interesting because what you will see is a lot of microcap investors taking profits here. Before this was announced, the stock went from 40 cents to just about $1. I understand why microcap investors would want to take profits. You've doubled your money, time to get out, reduce your risk, take your money and run, that type of thought process when you're investing, especially for newer investors. And then you get this discovery process where all of a sudden you're getting Beacon, Cormark, and Canaccord interested in Kraken Robotics. And look at that. I mean, that's what you get through the discovery process, where Kraken went from a winner and people taking profits to a substantial, almost life-changing winner, where, if you bought it, 30 cents and it goes up to $3, that's 10 times your money. Now, they had another financing here at $1.60. So significant institutional interest in Kraken Robotics. And through that discovery process, shareholders made a lot of money. When we go to Enterprise Group, similar thing, March 12th, 2024. They had a private placement, 8.2 million units at 85 cents. So similar thing. When I was covering Enterprise Group, that was down 20, 30 cents that they were at. Similar, they went up to 80 cents, right? People were taking profits here. They doubled, again, more than doubled their money, going from 30, 40 cents to 80 cents. Unfortunately, for people who sold out entirely, you got that institutional investment. You got that discovery, and the same thing happened with Enterprise Group. Once you got that, all of a sudden they went from 20, 30 cents to $2.50 very quickly. You see, when these microcap stocks get that type of discovery, get this type of institutional awareness. They had another financing here similar to Kraken Robotics at a higher price. This one hasn't worked out as well for them because share prices dropped where Kraken's kept going up. But once you get that discovery, you get this large buy right here, it just ramps up quickly and shareholders make, this is more life-changing money. This is a significant amount of money. This is definitely life-changing money. And that was Enterprise Group with their discovery process. So what's changing? When I talk about a changing landscape in microcap stocks, one of the things you will notice, or that I have noticed, is that I was always chasing institutional investments as far as, Beacon, Canaccord, Genuity, Cormark, some of the larger private equity places, large funds, right? Institutions is what I was chasing. I would suggest, and part of this presentation, what I'm talking about is that there's such a good growing community good growing community of microcap stock investors that are on these different platforms now, that there are other, platforms that can drive the price of a microcap stock up. And no stock is better at that than NTG Clarity Networks. So, NTG Clarity Networks, again, I put this right back to where I kind of discovered them and introduced them to my channel. This was back around 15 or 20 cents. And again, they went up significantly here. They went up to about 40, 50 cents. And we saw quite a bit of profit taking here. Some people sold entirely because, again, they doubled their money. And wow, that's a lot of money. It's time to sell. And don't get these dates perfectly accurate, but it's my understanding that right in here, the reason that share price went up significantly right in here is that's when Keystone Financial discovered NTG Clarity Networks and bought. So it wasn't Beacon, Canaccord, Cormark. It wasn't that type of institutional discovery, but it was still significant. And then retail, we didn't have enough buying power to move the share price after that. It kind of held stable for a while. And then again, don't quote me on the exact date, but it's my understanding that this next rise up in share price for NTG Clarity Networks was when it was profiled at MicrocapClub, with maybe potentially some additional buying from Keystone Financial. So again, we're not waiting for the Cormarks of the world or the Beacons of the world. This is Keystone Financial, MicrocapClub, pushing NTG Clarity Networks up significantly. Now, of course, people took some profits. We had a little bit of a slow time, obviously. Donald Trump came to office in here. There's all these other issues. Share price was volatile. It was down, it was back up, it was back down again. Recently, what happened? Why did it go from Keystone bought in the 70 centers? MicrocapClub here bought probably around $1.10, $1.20, $1.30 Canadian for NTG Clarity Networks. Bedford Park Capital, NTG was around $1.50, $1.60, and now it's sitting at $2.25. So again, we get the discovery process, and the discovery process doesn't have to involve the larger institutions. Keystone, MicrocapClub, and Bedford Park Capital have been more than enough to drive the share price of NTG Clarity Networks up from 15 cents to $2.25 and higher on some of these peak highs. But it's at about $2.25 right now. I think it went to what, $2.45, $2.50, something like that. So this discovery process works. It works well. It's hard to predict, but it is getting a bit more predictable. Why is it getting a bit more predictable? Because the other reason why I thought of making this video today was the announcement recently from Ian Castle. And what Ian Castle is excited about, as am I, is Ryan Telford. So recently, Ryan Telford joined MicrocapClub. They have now created a new index, a quant-based index based on several factors. This isn't some pseudo-subjective index. The vision here is to produce an index that showcases the best of microcaps across the US, Canada, and Europe. So this is it, Microcap Guts Index, or MC Guts. Now, Ryan Telford has been on Twitter and other platforms for a significant amount of time talking about this Microcap Guts strategy. In fact, he used to call it Baby Guts. I support the name change. Baby Guts was harder to say on a YouTube video. It is now Microcap Guts Index. And in my opinion, this is going to change the microcap stock landscape again. Previously, and it will continue, but typically you have investors finding stocks, presenting ideas, putting a lot of groundwork into it, calling management, talking to management, and then finally presenting an idea to a group of other investors through a thesis. And so there's a lot of people work. There's room for human error and there's room for bias. What Ryan Telford is building here through this Microcap Guts Index is get rid of all that. It's a straight quant strategy. So it's entirely based on the numbers. All that matter are the numbers. I'll talk about that in a bit, as well as sentiment and timing. But essentially, this is something that can be run all the time. And it's amazing with the new technology that has been making this more available, right? New software programs, new AI programs, AI built into new software programs, where all of a sudden we can run these not only screeners for microcap stocks to find stocks that are at an inflection point or improving, but build that into an index based on the numbers. Now, what does this mean for this presentation and for microcap investors as a whole? Is that for me, it really adds another layer to the discovery process. I have to add, Ryan Telford has become such a beast. And now having this Microcap Guts partnered with MicrocapClub, where we have some fantastic groups of microcap investors now also backed by a Microcap Guts quant strategy, right? And when I make this list here, I'm basically not saying that this one group is better than another group or, better quality or more successful or anything like that. What I'm looking at here is this group of microcap investors, small cap discoveries, microcap club, and the microcap guts index are more likely to go with smaller, high risk stocks. So if we're retail investors looking to do what Sebastian said on his article, which is be early, that's now gotten harder to do. It's going to be much harder to be early on a stock when you have significant, large, and growing microcap investing communities, as well as, one of the top quant investors on the market running an index for people to look at. So being early is potentially taking on smaller companies with more risk and doing more research to finding a little bit more undiscovered companies. Once you get past these three, again, not higher quality or lower quality, but again, we've got Ribmont, Bedford, Keystone, 8 Capital, not an extensive list. There's way more out there. But through the discovery process, if a stock is discovered by Small Cap Discoveries, Microcap Club, or Microcap Guts, it's not the end of the world. We're still looking at potentially more discovery as these larger players that can't take on as much risk start looking at the stock and get some additional discovery through them. And so previously, over the years, where I was always looking at institutional investment as kind of the big three, especially in Canadian microcaps. I don't know what all you Americans have out there as well, investing in some of the US microcaps, but in Canada, it's basically the big three of Beacon, Cormark, and Canaccord. I was always looking at this for institutional ownership. And now the changing landscape in microcap stocks is that some of these platforms are just growing in size, growing in quality, have the best microcap investors out there, and they can move price. They can move the share price of a stock. I just showed you that with NTG Clarity Networks. So that's what's changing, right? We've always had, Paul and Trevor over at Small Cap Discoveries, especially in Canada. We always had Microcap Club. I think both of these groups have been growing significantly with high quality investors out there looking for some of the best microcap stocks in Canada and the US. And now there's some significant improvement or movement towards European stocks as well. We've always had the fine gentlemen over at Keystone, and they were always a little bit harder to get interested in a stock. So I always saw them as like the next level of discovery, where sometimes people would recommend one of my stocks to Keystone, and I was always like, it's too soon. It's too soon. They're always a little more skeptical, and they need a stock that's a little bit more proven. And then same with Ribmont. Ribmont was with me on Kraken Robotics, which has been a huge success. So we moved through these large and growing groups of microcap investors that are building, through podcasts and discussions and articles, building a great group of microcap investors as it grows and grows in size and grows in intelligence and competence. And now we also have this guy, Ryan Telford, joining them with Microcap Club. And I think it's going to be game changing. Now, To understand that, because I was always a retail investor, that I tried to find stocks before small cap discoveries. I tried to find stocks before Microcap Club because, again, you wanted to be early. Now, if as a small retail investor, you want to go find stocks before Ryan Telford, that's an additional type of thing that's going to become hard and going to take a little bit of research. So, another thing I will link to down below in the pinned comment is there is a video talking about investing with guts and Ryan Telford's investing strategy for his microcap guts. And that's a video that's worth watching if you want to be earlier than Ryan Telford in finding some of these microcap, nanocap, and picocap opportunities. He's had a lot of public type education that we can go back and look at. So we can figure out what he's looking for in this microcap gut strategy. Growing, this is guts right here, growing, undervalued, timing, and sentiment. He talks about this throughout here. You know, Kyle asks a great questions. Well, what do you think about different management, quality of management? And again, Ryan confirms that this is an entirely qualitative index. This is quant investing, right? Now, the interesting thing with the microcap gut strategy that Ryan has is, you know, looking obviously at growing, and he gives basically some criteria for growth that we can dig into a little bit more in the future. He talks a little bit about undervalued. You know, he won't chase that 100 to 1 PDE type stock, right? Those are pretty similar requirements to most microcap investors and even quant investors. But this quant strategy in Ryan is different because guts includes timing. Basically, conventional wisdom asserts that you can't time the market, but I believe that timing is key, right? If the market doesn't care about your stock, then you could be waiting a long time for things to pan out. So timing is a part of the quant strategy, which is interesting. And then sentiment. How is the microcap stock perceived in the market? Is it a short-term target? How are analysts rating the stock? What are changes in analyst rating signaling? So this is a quant strategy focused on the quantitative metrics of a stock, but it is interesting that to beat Ryan Telford to a stock, you're going to also have to consider timing and sentiment, and we will look at that in future videos, right? So looking at fundamental and non-fundamental factors is what Ryan Telford will be doing. So now, one of the first questions that I got when discussing all this, you know, so many new great microcap investors and platforms out there. One of the things that I need to talk about is it's not really competition. And this is, I think, the happiest part of this presentation for me, right? We all have our different spaces. One of the things I recognized years ago and why I opened up Common Sense Investing is that for like a new investor or somebody who isn't investing a lot of capital, MicrocapClub and some of the other larger platforms are a little bit out of people's price range. You can join free to MicrocapClub if you give them a thesis that they accept and they allow you into the group. They have a 17% gain admission. Otherwise, you're paying $897 USD per year. So for new investors that might be out of people's reach, why there's no competition between me and any of those other investing groups. You know, I charge $5.85 a month, just basically for a little bit for my time. And the difference here is that I wanted to give a stepping stone for new investors, new microcap investors looking to learn in this space, but not willing to pay the higher prices yet. So I do hope that people join my platform, learn to love microcap stocks, make some money in microcap stocks, and then eventually graduate to the larger platforms like Small Cap Discoveries and like MicrocapClub. So that's kind of what I offer, a different platform than the other ones, in that this is my Discord. It's a very large Discord, and we talk about stocks. Well, every day we're researching and talking about some new stock. So that's kind of my platform and what makes it different from some of the others. But the main thing is, the thing that really makes me happy is that I was talking previously about how all this was kind of in our control. We can either go look for safer stocks or higher risk stocks, but we could find the stocks that fit our kind of bucket of risk and level of experience, right? But institutional ownership and market direction was definitely not in our control. Now that there's so many good microcap investors and so many good microcap investing platforms, you could see that we're starting to get some control and some visibility, in my mind, into what we previously called institutional ownership. And now, thanks to Paul Andriola, probably should be more coined discovery, the discovery process, right? Because we can see if you can't find a stock early or be earlier than Small Cap Discovery's Microcap Club or the Quant Baby Guts, the Microcap Guts strategy, that's no problem because there's other levels of discovery where if these platforms are potentially suggesting a stock, getting you to go research a stock, there's still other levels of discovery through here where the share price of a stock can go up. And there's also more visibility in that if you are finding a stock early and it's good and it's growing and it's going to be profitable or it becomes profitable, I think now because there's so many good investors out there and there's also now a quant strategy looking for these stocks, it's going to be hard for some of these good companies to not get discovered. I know in the past I've owned a stock for 2, 3, 4, 5 years, and it was always good. It just never got discovered. I think that discovery now is a lot more predictable because there are so many good investors out there looking for these things. So yes, while it might be a little bit harder to be early in certain cases, it might be hard to beat out, small cap discoveries and microcap club and Ryan Telford's, gut strategy. It's going to be hard to be earlier on a stock. It's going to be harder to be the first person to find a completely undiscovered stock. But because of the quality and quantity of the microcap stock platforms out there, there's going to be multiple levels of the discovery process and multiple ways for people to make money on a stock. And that really makes me happy because I don't know how long many people here on this live stream have been following me, but when I started this YouTube channel back in 2022, my intention wasn't even really to talk about good stocks to invest in. Most of my channel was dedicated to exposing bad stocks and trying to help microcap investors stop losing money by gambling on some of these high risk stocks. And you can see these are actually some of the thumbnails back in 2022 on some videos that I made. AITX went from way up here. They've lost 97% now. They're at 1/10 of a penny and a market cap still of $18 million. How can you have 1/10 of a penny share price and an $18 million market cap? You have billions of shares on the market, right? I warned people about this company and it's way down. ILIS, Illustratio Pictures International, down to 2/10 of a penny, $3.9 million market cap. It's up 60% in 5 years because I don't know why it factored in starting from nothing. Basically, it started from here. I was warning people about ILIS. It crashed down to here. It's lost something like 98% of its value. Remember Mullen Automotive? I really like this thumbnail, right? The car on fire, down 100%. I read somewhere that if you'd invested in $1 trillion in Mullen Automotive at the top, after all the share splits and price declines, you'd have something like $1,000 left out of your $1 trillion. I don't know if that math is true. I saw it on an X post, right? But I mean, Mullen Automotive, I was warning people about that. It's down 100%. Fobi AI, this is a Canadian one, 5 years, down 90%. People love this stock. It's now down to a penny, $6 million market cap, significantly down. And then, of course, Metamaterials. And this one, I was doxxed. People chased me down online, called me names. I had to stop making videos for a while. It got really nasty. This is, interestingly, probably my most accurate thumbnail of all time, where basically I made a video warning people about pre-revenue stocks, but mostly the video was on Metamaterials, with this hand pointing, you're throwing your money into this hole if you're investing in this company. It went from a $20 share price to bankrupt. It is now bankrupt, unfortunately. So I don't celebrate when people lose money in the stock market, but I can celebrate that I at least tried to help people in the past. The problem is, after making so many of those videos in the past, stocks to avoid, eventually my YouTube channel was canceled. There's a lot of money in those stocks. There's a lot of people with warrants and stock options and convertible notes. It is big industry where people will finance a shitty stock and pump up the share price, and they make money, and retail investors lose money. So over time, I was trying to help people and I got canceled, and that sucked. And I had to restart my channel talking about good companies and good stocks and take a different approach. And that approach for this channel was more education. If I can't or couldn't warn people about shitty stocks because my channel was going to get canceled and I was going to get doxxed and, have all these problems at home, then I was going to change that through education. And now what I'm seeing is that, and why I'm so happy today is it's working. It really is. I am just seeing less and less of this support for those shitty stocks. And it is all due to these platforms growing the microcap space, educating people, bringing people into this space, including on this list. I had to list all the Substacks out there, a growing list of absolutely amazing Substacks. And if you partner all those up, they're probably just as influential as any of these microcap stock platforms. But at the end of the day, I feel like these platforms as a group working together are simply doing such a good job of educating microcap investors. And I'm so happy about that because I don't have to go back and start making these videos again. Instead, we could focus more on education. So that is the changing landscape as I see it. More, better microcap investors, it's a good thing. It is harder to find a stock early. It's hard to discover that stock that nobody's ever heard of before. And, it's going to go up 10x the second the first person figures out it's a good company. That is somewhat gone because there's so many good new microcap investors out there. But the changing landscape is that, if we get rid of institutional ownership and we say discovery, there are much more large, educated, intelligent groups of microcap investors out there with capital who help with the discovery process, and with all the education working together, there's more visibility, and it's turning into a fantastic place to be, this microcap stock space, because instead of, gambling that your stock is going to get discovered and, these people risking so much of their capital on these stocks that go absolutely nowhere, there's more people coming together to find good companies, to give capital to good companies and buy their shares and finance them. So that's what has me happy today. That is the end of my presentation, talking about the changing landscape in microcap stocks. I hope you enjoyed that. I am going to go to Q&A comments. So if you have any questions, concerns, comments, any stocks you want to talk about, now is the time, because I am going to Q&A. I will say, not a financial advisor. If I give any opinions on any stocks, I am not your financial advisor, right? Just one guy talking, one guy's opinion about a stock, just to open up communication about some of these stocks. That's all I'm here to do. I'm not a stock picker at all. That's not what I do. I just like to open up channels of communication, and it's not how to invest. It's how I invest. That's one thing I talk about a lot. It's not even about stock picking. It's about having a good microcap investing strategy that will make you 1,000 times better investor, is to have a good strategy and focus a little bit less on individual stocks that you're interested in or not. So thank you for your time, and let's go see if people have any questions. There might not be a lot of questions today just because this was not a very question-y type video. It's me ranting about how I'm so impressed about how many good microcap investors there are out there. Do I invest in AI, TSSI, TGen? I struggle with valuation and future earnings. FOMO is real. Greetings from Denmark. Addicted to your videos. Number one, thank you for being addicted to the videos. Really appreciate it. And hello to Denmark. It is amazing. I talk about this growing platform, this growing group of microcap investors. They are from all over the world. We recently had a lot of investors join us during COVID, especially late 20, early 2021. A lot of those investors lost money and have kind of gone away. Now, what I'm finding is there are numerous people from around the world recognizing that microcaps are a fantastic place for your average person, for your average retail investor to be. So, hello to Denmark. As far as TSSI and TGen, no comment. I have nothing to say. One of the reasons is that they are very popular stocks. They're on social media. I see them all the time. Very volatile share price. I know some people in my Discord have been trading those stocks and making money. I have not looked at them from a financial fundamental perspective because despite me talking about all of this discovery process, it's through institutions and educated type microcap investors. When I see a stock that's volatile due to a large group of people on social media pushing it up and down, that's not something that's very predictable for me, and I tend to stay away. Now, I may change my mind. I may reconsider and take a look at TSSI and TGen. One of the reasons might be is that it would probably get me a lot of video views because these stocks are so bloody popular right now. But no, I have no comment on them right now. Toy maker Jake, 3.1 net income EV with a 4.7% dividend, cash cow, but cyclical and tariff risk is high. I could tell you now without looking at the stock, I wouldn't have tons of interest. I'm not a huge fan of microcap stocks that pay dividends. When a microcap stock pays dividends, I question why they're not investing in growth, why they think a dividend would be the best way to make money for their shareholders. Now, that might be different if it's a European stock because they have a different style of returning money to shareholders because they have different tax implications. As well as I do have to change that thought process a little bit because recently I've been very bullish on McCoy Global and they pay a 3% dividend. But my question right off the bat would be, why are they paying the dividend? McCoy Global pays a dividend and I'm bullish on them because they already have a new product. They have that, in that Can Slim slide, have a new product or service that's going to grow the stock exponentially. McCoy Global has that new product or service. It's already paid for, so now they're paying a dividend and they're going to get growth. So that would be my question. I'll maybe take a look at Jack later on after this live stream, and especially if you're in the Discord, I definitely don't have a problem with looking at it. Right now in the live stream, we'll probably move on to a few other comments if you don't mind. But that's my question, is dividend. Really interesting view of all this investing. Glad you did this perspective. Thank you. I just wanted to point it out to people. I like mixing up some of I get tired of talking. Well, I don't get tired of talking about specific stocks all the time. I absolutely love it. But I would be remiss if I didn't add in at least a little bit of education throughout some of these videos. And I hope this was education. A lot of people might think it was a stupid thing to talk about. Why are you talking about the discovery process, Cameron? But I mean, like I showed through Kraken Robotics and Enterprise Group, and then NTG Clarity Networks, people that sell or highly trim a position before that institutional discovery, they doubled their money. They didn't 10x their money, right? It is such an important part of microcap investing. And I was just so fascinated now looking at it because we do have some other platforms that are able to add to this discovery process, and I absolutely love it. Intermap had very interesting earnings. I'm just wondering how their stock can grow from here. Their valuation is high. Intermap, if they're going to grow, is going to have to continue this, high growth. And according to the company, they are expected to continue this high growth. They have a good enough product paired with their service that, if they get the right contracts, I would look at Intermap's comparable as something like Kraken Robotics. That has to be what you look at if you think you're going to make money with Intermap. That has always been the problem for me, is every time I look at Intermap, it always looks a little bit overpriced, right? But there are some stocks out there that every time you look at them, they always look cheap. And you always think, oh, they're going to get that multiple expansion and I'm going to make a bunch of money. And they just continue to be cheap. And we get those stocks. We also get the stocks that are high quality, high growth, good future potential, and they always look a little bit expensive. So that's what I would look at, is where you think Intermap's growth can go into the future, because when you model out a stock, you will find that with a high growth stock, expensive multiples look pretty cheap. You just have to wait a year or two, usually, right? So model it out, see where you think it can go, and then try to determine from there whether you think it's a good value, right? The other channel was more educational. Maybe you could make a second channel. Yeah, look, people liked when I used to roast companies, when I used to expose the shitcodes. It got me into a lot of trouble. That's the problem with making a second channel. It's not just about getting canceled again from YouTube. I am not lying. I received very angry emails. I received letters from lawyers to cease and desist, and we're going to sue you. And I was doxxed. And that's the worst part. I have a family. I don't really want my shenanigans here on YouTube to impact my family. And it sucks that that's the world that we're in. And that's why I'm so happy to present this today, is that once that channel was canceled and I didn't feel like I could do that anymore, free speech is a tough one, because I don't really believe that we have it. If we can't sit here and talk about how a stock is bad because we're going to get attacked, that's a problem, but that's what happens. But what we've done now is we've gone the other way, and through education and getting other platforms out there, larger platforms, and getting everybody together and work on this education, trying to educate more new microcap investors, instead of exposing the shitty companies, we've been trying to make better investors. So hopefully that works. If you could only buy one small cap today, what would it be? Fearan Technologies, ftg.to. You're asking small cap. I don't know if you mean microcap or small cap. Fearan's, I think, $225 million market cap. Aerospace and defense, expanding into India. Fair valuation. They're definitely not cheap, but I don't think they should be a cheap valuation. Go take a look at Fearan. One of the things with all these trade deals is one of the Fearan's customers is Boeing. And one of the things with all these trade deals that Trump is putting together, I keep hearing Boeing. So, I think Boeing has a pretty solid future ahead of them. And if Fearan can continue with some of the large players in the space like Boeing having a good future in front of them, then Fearan will also have a pretty good future in front of them. I wish I loaded up on that stock back at like $3-4. I love that company. First Kraken Robotics purchase was on October 2022. Never look back. Glad to see your content grow and evolve over the years. So thank you for being here for that long. You went through a channel cancellation and a complete shift in basically how I make videos. So I appreciate you sticking around and not just for me, but for being in microcap stocks for 3 years. That's absolutely fantastic, right? One of the things I hate, or at least hated, in the microcap space was how many people left. Typically, I used to see two types of investors in microcaps. Usually they call them penny stocks, right? We would get the new investor who thought they were going to become a millionaire, and they would buy some 1 penny stock and it would go to 10 pennies and they were going to become rich. That was what we saw a lot of back in the day. And, they ended up losing all their money and then disappearing and giving up, and this is all a scam. The other type of investor we saw was the more educated investor, the one who invests in indexes and Tesla and Nvidia and, stock picking through that direction. Decide, I'm going to come down into microcap stocks. This is going to be easy. I'm looking for the same thing. And a lot of those investors didn't know how to read earnings. When you invest in Tesla or Nvidia, usually you're reading opinion articles, or somebody else will break down the earnings for you. And you just have to read different articles and decide which author you agree with, and then go buy shares of Tesla or not, right? And those people were coming down into the microcap space, losing money because they didn't know how to read the financial statements, and then saying these penny stocks are all a scam, avoid them, they're all hot garbage. That's not true. The problem is a lot of microcap stocks are money losers. A lot of them are hot garbage, as my videos used to show people. There was a lot of scam shitco's out there. And you have to know at least a little bit with some guidance through some of these platforms like Small Cap Discoveries and MicroCapClub. You need to know a little bit what you're doing before you get involved with microcap stocks, right? And that's just the way it is. And with these new platforms, hopefully we're getting more microcap investors here making money, staying around for 2, 3, 4. If you're here for 3 years investing in microcap stocks, you're probably addicted. And like me, you're going to be around for decades, right? I don't like chasing timing. It almost sounds as trend chasing or even pump and dump. No, you almost have to chase timing. I've had this discussion with a lot of buy and hold investors. And I've got an article coming out on that. So go check out my Substack. I think it'll be a free article. And it does depend on you and your personality. But one of the superpowers that we have as retail investors is flexibility, right? When you're going to buy $100,000 worth of a microcap stock, it can be a long, slow process, because if you go too quick, it can drive the share price up and you won't build your position. So typically large capital investors tend to be buy and hold, and they can't worry about timing because they don't have that flexibility to sell at the top and buy at the bottom. But microcap investors, we absolutely do. I mean, I could pull up a stock like California Nanotechnologies. Go look at California Nanotechnologies. It went from 15 cents to $1.95. Everybody knew it was massively overvalued at $1.95. Now, recently dropped back down to about 40 cents. And for people who didn't follow that timing and didn't have some rules about stop loss and trimming and taking some profit and wasn't worried about the timing of a stock, they lost significant amounts of money on Cal Nano. So it's something to look at. Myself personally, I don't time the stock as much as I used to, but I also try to time the markets a little bit. I tend to buy on fear, right? So I feel bad whenever my stock goes up for non-business reasons. No, we're here to make money, so it should feel good. If it's going up for non-business reason, that's when I'll switch to the technicals and consider, like California Nanotechnologies, when it went to $1.95 Canadian, is it overvalued? Should I trim? Should I sell? What should I do? Right? So never feel bad about making money. What stock was that? Sounded like Fear Ends, but I know I misunderstood that. Can someone share what stock? FTG.to, Firan Technology, FIRAN Technology, I believe it is. FTG.to. That's the one. Have you seen the earnings report for a week or two ago? Not really. Not past the highlights. So, again, I talk about the superpowers of microcap investors, one of them being flexibility. The other is simple companies that larger institutions can't invest in. Well Health Technologies is the opposite. Well Health Technologies is now, over $1 billion market cap. They have multiple business divisions with separate CEOs. Their earnings are extremely complicated, and it takes me a shit pile of time to go through their earnings. As a retail investor, when I have to dedicate a significant amount of my time to research one stock, I am losing my advantage. Institutions have a better advantage over me when looking at a stock like Well Health Technologies because their earnings are so complicated. They have more resources, they have more time, they have more manpower. So Well Health Technologies will be removed from my Discord lists, not because I don't like the company. I do. The problem is I can't continue to look at a stock that takes me half a day to look at their earnings. I just lose my advantage. So I did not do a deep dive on Well Health Technologies. I'm assuming it's the absolute same, which is I thought I saw they had something like 32% growth, but they probably lost money at the bottom end and people weren't happy with that, and the stock sold off, right? That happens every earnings with Well Health Technologies. And to really invest in Well Health, I would need to go through each business division and make a decision on where it's going and where I expect it to go and where the company's saying it's going to go. I don't have that time. So I still like the company. I still think Well Health has good long-term, future potential. They're basically pretty soon you won't be able to go to a doctor in Canada without using Well Health Technologies, but it's too complicated right now. How do I do the monthly subscription? Do I join your channel here or your channel, or do you have a website? Go to commonsenseinvesting.ca. It's right up here on the screen, commonsenseinvesting.ca, and it will show you the options, because I have you could look at the Discord and see if that's something you want. And for people who don't like the Discord, I also have a Substack, right? So I have a couple options. It's easier to just go to that website right up above, right? The monthly option is my best value is the Patreon Discord. That is my best value. I have the Substack because some people don't like Discord. Discord takes some technological experience, right? It's more for especially younger people. Even myself, I find it annoying sometimes because, there's scammers on there, and you got to open up a user account. You got to download a specific Discord app, and there is some technology involved. And so basically, for people who like that, I have the Patreon Discord. We do most of the stock research in there. But for people who don't like that, I also have the Substack, where it's just my articles come to you in an email. I think it was Rear End. Yeah, instead of Fearin. Rearend.to. Great company. Now Vertical Group Inc. will have earnings this week. What do you think about this company? I love Now Vertical Group. The trick is that I loved it at 12 cents, and I bought it at 12 cents. And I loved it at 8 cents when it dropped, and I bought it at 8 cents when it dropped. And the trick with Now Vertical Group was loving Now Vertical Group before everybody else did, right? One of the problems is, and I talk about this quite often, is that as share price goes up, so does risk, so do expectations. So Now Vertical Group now went up to, 55 cents Canadian, 56 cents Canadian these days. I think I still like the company, mostly because why did I like them at 8 cents? Their CEO, Now Vertical Group CEO, put on a masterclass in 2024. If I had awards to give out, then the CEO of Now Vertical Group would have gotten the award for the best CEO of the year from me personally, and not just because they made me money and I own shares, but because he did such a good job. He's basically reduced the risk of the debt significantly. He's got the company to the point of they have potential to grow again. They're not growing yet significantly, but they have potential to. And I think that's what this comes down to. Now that the price has gone up and the expectations have gone up, my question for you in Now Vertical Group is, can the CEO get this company back into a high growth rate? That at this share price, that's going to be the difference between, not making money on Now Vertical Group versus, yes, this is a great opportunity. You have to believe, do some research, figure it out, go look for CEO interviews. You have to believe that this company can get back into a high growth atmosphere for the stock, right? For the company, and then the stock will follow, right? Just from the current price, Well Health looks like good buy because it went as high as $7 previously. Yeah, I agree. Analysts had Well Health Technologies at what, $8, $9, $9.50. I'm saying I don't have the resources to really look at the company in depth. Some analysts do, and I would agree. From what I've seen in the past, it seems reasonable. It seems like this should be an $8 or $9 company, and instead it's back down around 4 something. So go take a look at what the analysts are saying. Assuming you think Well Health Technologies can meet or achieve the analyst expectations, it would be reasonable that they get that kind of share price. The thing that Well Health is always fighting is they are a complicated company. They're not getting institutional ownership, which we just talked about in today's video, and retail investors don't know what they're doing, and they're buying it high and selling it low and buying it up high again. And, there's people basically trading this stock. There's people shorting this stock. So Well Health Technologies is retail volatile. Typically, any stock that you get mostly owned by retail investors, controlled by retail investors, will be volatile. Well Health Technologies, if they're going to reach their potential in the future, I would go look at institutional ownership and whether institutions are adding, shorting, removing. What are the institutions doing? Because for such a complicated stock as Well Health Technologies, they're the ones who can dig into the future a little bit better and figure that out. Is NTG Clarity reasonable priced at 214? Good question. I mean, we ran models and other people ran models on NTG Clarity Networks, and fair value for NTG Clarity Networks, a lot of people on social media were saying it's somewhere between $3 and $3.50. I thought that was unreasonable at the time, and the reason is because NTG Clarity Networks is a company operating in Canada, but all of their revenue, 95% of the revenue, is coming from the Kingdom of Saudi Arabia, and all of their workforce is in Egypt. So it was never reasonable to put a Canadian, North American, American valuation multiple on NTG Clarity Networks because of that perceived risk. They're basically operating in the Middle East. Now, why has price gone up? Because people are starting to recognize that the Kingdom of Saudi Arabia isn't as risky as it used to be. People have lost a lot of money investing in the Middle East over the decades, but I mean, right now, Trump was just for the first time, a U.S. president was in Qatar and KSA. Arguably, I would suggest that the Kingdom of Saudi Arabia right now has been less volatile than North America. Thank you, Trump, right? But 12 months ago, when I was talking to investors about NTG Clarity Networks, the answer was hell no, too much risk because they're in the Middle East. And now I would go back to those same investors and say, really? So it's tough to say whether they're reasonably priced because you have to figure out what you think is a fair valuation for this company. Can investors get over that perceived risk of Saudi Arabia? Will they be willing to pay a fair valuation or even a high valuation because it is in Saudi Arabia? Can they continue their growth? As well as check out some of the history of the company. Make sure you take a look at that. So good question. Good question with NTG Clarity Networks. I think there was an analyst that just put out a price target of around, what, $3? So at least one analyst thinks that it's fairly priced. That's it for questions, concerns. Last chance. I'm going to take a sip of my coffee here, and we're about 58 minutes into this live stream. So last chance for questions. If not, I'm going to go get my next video ready. I'm back on YouTube. I took a break there because I did so much research on Planet Microcap stocks that I got burnt out. Recently made a video on Symmetrix and recently made a video on Zone Properties, a little OTC stock that I like. And, I'll have another one coming out this week. So I'm going to get back into introducing you to one company per week. FTG, yeah, I've been talking about FTG, this FTG.to, Fearan Technologies. I've been talking about that on this live stream here. Good company, really good company, good potential for the future. You are welcome for the stream. Really appreciate everybody joining me here. I had like 65 people today. That's absolute fantastic. Your top microcap stock for the rest of 2025. Good question. Good question. I don't have to put out a top one. I already put out a top list. I have a video of the top 5 microcap stocks for 2025 that I made back in December. Google that on YouTube. Take a look. I don't think much has changed, in my opinion, since then. Those stocks, some of them are still down in price and have a potential of going up. So go take a look at that video. Top 5 microcap stocks for 2025 on YouTube. You are welcome. You are welcome. Good luck, everybody. Have a great week investing. Hope everybody makes money, and I'll see you again next Monday. And hopefully, we're all happy and had a good week in the markets. So, thanks for joining me.